Hello everyone, my name is Horvat and welcome to a new video analysis in which I will cover Euro, Aussie, Dollar CAD, Dollar Yen, S&P 500 and gold. So on Euro dollar we are tracking final stages of wave C, which I think it's still incomplete, but in the second part of 2015 or at the start of 2016 we will be looking for a potential bullish reversal, but for now we are still not there yet, as this bounce appears to be corrective uh, since March. Okay, notice that this rally is actually very slow and bulls are much slower compared to previous bearish decline, which was clearly an impulsive price action. So we think that this is just a temporary pause with an ongoing downtrend. So on a daily chart, we identified this move as a counter-trend movement labeled as wave 4, which will typically trace back to the area of former wave 4, which is right here, and also towards 38.2%. So actually we have seen these levels tested from where market reversed twice. So actually price is ranged, which I think it can be a triangle in fourth wave. Now triangle is a 5-wave pattern structured by subwaves A, B, C, D and E, which is still not the case, but on the 4-hour chart we can already see a recent turn up from this Sunday that can be a wave E, okay, finally like within this pattern. So ideally we will see a completion of this triangle sometime later this week. I'm looking for resistance around 1.13 towards 1.14 level, okay, invalidation level. I would not say this wave C, I would pay attention to this wave A levels, okay. So now actually the euro dollar is still sideways, so if you're planning to trade on the short side, you definitely firstly need to wait on this completed pre-wave rise and impulsive reversal to the downside. Only 5 waves of decline, okay, from this mentioned resistance area will confirm that trend is headed to the downside, okay. So until this happens, I also need to keep an eye on the second alternate wave count, which actually shows that we are in a double zigzag here. So this could be a first zigzag. Okay, then we got the wave X and now flat for wave B, that is part of a second zigzag. So actually we could see a break to a new high here, but again I would then wait for a 5-wave fall from this new high before I would turn bearish. So we are tracking definitely two very aggressive bearish wave counts that should send euro dollar to new lows again this year, okay. But for now euro dollar is sideways, so be aware of more ranges ahead. And now let's take a look on Aussie dollar. So on Aussie dollar, we will review the weekly chart first. I'm tracking a very deep complex correction, double zigzag, that could see a test of 78.6% retracement compared to previous 5-wave rise from 2008 lows. So it appears that we have more weakness ahead, at least for the few weeks, for another few weeks, because on a daily chart, clearly this was a corrective recovery, okay, because of an overlapping price action. So we will stay bearish on Aussie dollar for now, especially because this decline through this rising trend line has unfolded in impulsive fashion, okay. So actually you can see that reactions to the downside was impulsive, while this market, while this price action is looking very slow, so definitely it must be corrective, okay. So I think that this is just a pause with an ongoing downtrend. Now on the 4-hour chart, as you know, we first identified end of a wave 2 with a 3-wave rise here for a wave B triangle, and then wave C up that completed wave 2. So actually we were looking for a straight move to the downside. This did not happen yet, but bearish wave count still is not invalidated as long as we are trading beneath 7750. This is very close, so actually I am paying attention to something more complex. I'm considering the idea that this decline was wave B, and that actually we will see higher levels and more complex wave 2. Okay, so actually I would label this as a free wave rally for wave A. Okay, this black wave A. Then you got the free wave fall for wave B now that appears complete, and we could see then another impulsive rally up into wave C before market will turn to the downside. Okay, so actually this could come into play, but keep an eye on this. Keep an eye on 7750 figure to confirm this outlook. Okay, but all in all, I think that Aussie dollar is bearish on longer term charts, and that sooner or later pair will break beneath these lows from early April. Okay, now let's take a look on dollar CAD. Dollar CAD is looking bullish, and clearly we identified a nice impulsive structure to the upside since 2014. We are tracking actually impulsive wave C that is part of a second zigzag. So actually this was first zigzag, then you got the deep wave X, and now you have a second zigzag. Now I'm tracking here an extension in wave C, which could be possible, but we know that extensions are usually in third waves. But notice that this wave C was also extended back in 2008. Okay, so maybe we'll have something similar here. But all in all, no matter which wave count you're tracking, maybe A, B, C to the upside, or maybe you think that we are now in a big black wave 3, not wave C, you would still expect more upside in weeks ahead, as both wave C and wave 3 are impulsive waves, so they must be structured by 5 subwaves. So actually here was wave 1, wave 2, nice very strong wave 3, and a few months back we were tracking this wave 4 very closely, and it looks like this correction is now completed and that we will see higher levels ahead. The reason is this decline on a daily chart, which you can clearly see that is in 3 waves. Not only that, we have seen a sharp impulsive reaction to the upside through this upper channel resistance line, parallel channel resistance line, but more important, we have seen an overlap with this wave A. Okay, so let me zoom this in. So actually this rally back into the area of wave A, which was here, confirms the fact that this was a corrective decline, because let's assume that you would count this as a wave 1, 2, 3, and you would expect more downside after wave 4. Okay, then your wave 4 must not trade into territory of a wave 1. If this happens, then you know that this is not new change in trend. It was most likely just a correction, like in our case. So I'm looking for more gains ahead, and we could see straight moves to the upside because recent decline, which I labeled it as a wave 2, appears complete. Here is better shown on the 4-hour chart. You can clearly see that we had 5 waves up for red wave 1, and then nice 3 wave retracement exactly to 61.8%, which is very important fib level for second waves. I also noticed that wave 2 moved back towards the area of a former wave 2 and not wave 4. And this is very interesting because notice that wave 1 was quite extended. Okay, so when you have wave 1 extended, you will typically see a retracement with 3 waves in a larger degree back into the area of a wave 2, not wave 4. Okay, like here, for example, if you take a look on this minor subwaves, you can see that this was a 5-wave rally. Okay, and notice that here wave 2 retraced back into the area of a wave 4. Okay, so in either case, you always need to pay attention to first support for a wave 4 and then a second support for a wave 2. So somewhere around those levels, most likely the correction of a larger degree would complete the cycle. Okay, so you can see now that that market made a nice reversal to the upside. We have seen a break above this wave B swing high, so it appears that we have more upside in play. Today we have seen a new swing high here, but I would pay attention on daily close price and a decisive break, let's say towards 1.25 to confirm the end of wave 2. Otherwise, we can still maybe see another leg down before market will finally move to the upside. Okay. into wave 3. But all in all, either we have seen wave 2 low here, or maybe we'll still see another leg to the downside. I'm looking higher as long as the market is trading above these swing lows from June 18. Okay, and now let's take a look on dollar yen. Dollar yen made a nice pullback for the last couple of weeks. Okay, and you can see that actually I'm tracking a corrective pullback. We have seen a retracement back into the area of this base channel. Okay, so for our new followers, what is base channel? Is actually a channel where you connect start point of wave 1 and end point of a wave 2, and then you put this parallel line at the top of wave 1, which was here. Okay, so when you see this upper trend line broken, then you can assume that market is making an extension, and that is probably in a wave 3, not wave C. Okay, so in that case you would then pay attention to a pullback in wave 4, which could then find support at one of these trend lines. So either at the upper trend line of this base channel, maybe mid trend line, or maybe at the lower trend line. I usually pay very close attention to the upper trend line, because this is more significant. And you can see that we are here now at these levels around the upper trend line. Also, we identified this leg as a wave C, which is trading around 50% compared to wave 3. So ideally we will see a bounce to the upside. We also have an open gap here, which are very rarely will stay unfilled. So definitely I see room for 150 pips minimum in days ahead. Okay, invalidation level is clearly here identified at wave 1. Okay, so this was regarding the wave count. I also have this technical chart here. You can see that this in yellow is quite important. That's 50 moving average. And you can see that market is actually bullish as long as it trades above that moving average. You can see that we have seen a bounce to the upside from here. Then we have seen a consolidation, but still market was trading actually above it. Okay, and now again we are pulling back towards this 50 period moving average. Also we have a blue, which is 100 moving average. So actually I can see some nice supports here, not to mention these former swing highs that would also react as a support in current pullback. Okay, so all in all, I think that this bullish trend is still not invalidated. So I would not be surprised to see more upside. Only a break beneath these swing lows from mid-May would invalidate the bullish trend, and would likely suggest that dollar yen has topped out and that we will see a major corrective retracement. Okay, so that's for regarding currencies. Now we will cover the S&P 500. I adjusted the wave count a little in the latest updates. So actually on the weekly chart, no major changes here. We are still think that market is trading at final stages of an extended red wave 3. Notice that since end of 2014, actually we have seen higher highs and higher swing lows, but again market made still very slow and overlapping recovery. So I see here decline in volume and bullish momentum especially. So I think that we are in a late stages in a fifth wave, because usually in a fifth wave you will see a decrease in volume. So actually I see here an ending diagonal, and a reversal to the downside could follow in days ahead, maybe in weeks ahead. Usually breakdowns will take place, but definitely take a lot of time. So actually I still anticipate another move to the upside. You can see here on my updated wave count that this recent decline from May can be in 3 waves. Also we have an open gap from Sunday a little bit higher. So I think that we could see another push to the highs before market will turn bearish. Also The reason is definitely this structure. Notice that the first leg from the highs has clearly unfolded in 3 waves. Okay, so always when you see a 3 wave structure, either that's a whole completed correction or it's part of a complex correction. In my case, I see part of a complex correction, which is a flat. 3 waves down for a wave A, 3 waves up for a wave B, and now I see a 5 wave decline for a wave C. So ideally we will see impulsive reaction to the upside. Okay, but again, we are here in very late stages of this fifth wave, so even if I'm wrong and maybe we'll see immediate decline to much lower levels, I would not be surprised. Okay, because sooner or later this S&P will likely make a deep major correction down into wave 4. So I'm not so sure if I would love to be positioned on the long side in this market. Okay, definitely would be interested to look for some longs maybe if we will get back towards this wave B, and then watch out for this red wave B pullback to catch wave C to the upside. Okay, and now on this long-term chart, again, notice that price is above 50 period moving average on a weekly level. Okay, so clearly this bullish trend remains in place as long as we are above this level. So actually, if we consider that we tested this 50 moving average on a weekly basis, I would not be surprised to see another push to the upside, especially if we consider that we have here 3 waves of decline. Okay, now let's take a look at gold. Now, if you expect more dollar strength, if you expect more more upside on stocks, then gold will usually stay under pressure. So I'm still looking for another push to the downside, but with limited losses here to complete this ending diagonal in wave 5. Here we have a clear pattern, actually textbook example of an ending diagonal. 3 waves down for a wave 1, then you got wave 2, 3 waves down for a wave 3, wave 4, and now obviously I will be tracking 3 waves down for a wave 5. Notice the most important of all is that this rally from November of 2014 till end of January 2015, this was a move made in 3 waves. So always when 3 wave move is finished, okay, you would expect that this move will be fully retraced. And notice that we haven't seen this level broken yet. Okay, but we have seen an impulsive reaction down from 1300. So actually I'm looking for more weakness ahead, not to mention that market made 3 waves to the upside. We have been tracking this for a while, and also this decline can be counted in 5 waves, but as an expanding diagonal. This is very similar to leading diagonal. The only difference is that trend lines will expand, not contract. Okay, so actually wave 4 traded into the area of wave 1 here, and before market made a wave 5 move to the downside, and then market found a support at this lower trend line, and you can see it made a 3 wave rally, very nice clean 3 wave bounce back towards this trend line. Okay, actually this was a trend line, channel line connected for March lows, which reacted as a perfect resistance here, and not to mention that this decline is also looking impulsive on the intraday charts. So I think that gold has more weakness ahead, and ideally we will get a very strong decline into wave 3 of 3. But minimum expectations suggest that we will see, as I said, new lows for 2015, and then maybe a bottom later this year. Okay, so for now gold is still bearish, but with limited downside here. Okay, I'm expecting a bounce in 2016. Here on silver, I'm also tracking a bearish pattern. I see potential triangle that can already be finished. I mentioned in our intraday updates that sometimes wave E can be very small, no matter if each previous subwave was very strong. So I would not be surprised to see more weakness ahead, especially if you consider the immediate bearish structure on gold. So keep an eye on this level, actually support level around 1520, back from early March. If we will get this breakout here with a daily close beneath this level, then I think that silver will be ready to move much lower in days ahead. Okay, traders, thank you for your attention, and I will catch you with new updates on our intraday page. Have a good day.